All right, Josh Brown, that's Brad Gerstner. You agree with his assessment that if you think the selling in tech is over and in the NASDAQ, you're going to be sorely mistaken?
Yeah, I don't think that anybody could definitively plant a flag in the sand and say right here is where it's over. In fact, the S&P 500 is still only 4% off its all-time record highs. The RSP, which we talk about, is the equal weight S&P. We talk about it because it gives you a better sense of what the typical stock is doing, not just the 10 largest stocks that drive the S&P. That's only 3.5% off the highs. It's actually hanging in there better. So how do you look at that and say, yeah, that's it, we're done with the selling? The NASDAQ's a little bit worse and more interesting to me. So the NASDAQ's 5.5% off its highs, which feels a little bit more meaningful, especially given how overweight so many short-term traders are in these stocks. And I think the statistic is 50% of NASDAQ names are in a 20% or worse drawdown. That's a pretty big deal. That's why when people are walking around saying bubble, it's hilarious. What's in a bubble? Everything is down 20% or more. But you might see the FANG stocks start to succumb to the weakness all around them in the rest of the Qs and in the rest of tech. Maybe that will be the selling crescendo that we need to set up for a run into the end of the year. So if you told me Facebook could give up another 7-8% from here, absolutely. Why not? Of course it could. But I wouldn't look at that as being non-constructive. I would look at that as an opportunity.
I think many people would, probably you as well, Pete, and what was a NASDAQ hanging on to positive territory has deteriorated over the last few moments or so. Now we're negative on the NASDAQ. And to Josh's point about the FANG stocks not trading so well lately, I've been reading these declines for the month of September every day, and they keep getting added to. Apple's now down 6%, Pete. Amazon's down 5%. Alphabet's down 7%. Facebook down 10%. Microsoft is down 5.5%. We don't include Netflix in this conversation, I think, for obvious reasons, and everybody understands why we do that. But, Pete, is Gerstner going to be right?
Well, I would say this. I would say when you're looking at those high multiple, no multiple stocks, they still have a long ways to go, Scott, especially based upon when you look at some of these various names and we wonder when are they going to start to make money. If we get right to those big name stocks that Josh was just talking about, you were just talking about, I think that's a little bit of a different animal. I think the great part about things right now is as we've had this pullback, as people have paused and started to even hit some of those stocks like Microsoft, and you just went through the list that were coming off of those highs that they had just hit and then pulling off a reasonable amount, and they could certainly go further. But with the implied volatility jumping the way it has, Scott, and I'm not just talking about the VIX itself. The VIX was 17 on Friday, it was 18 on Monday, and now we've been in the 20s ever since in the last 2 or 3 trading sessions, and we're at 23 right now. That also means that we are seeing implied volatility in a lot of these various names start to move to the upside. It's giving me a chance, for instance, in Apple and Facebook and some of these names, Microsoft, where I am selling calls, I'm buying them back, I'm selling calls again. I'll give you a great example, Facebook. I just went through this exercise with my team, and we were looking at it. Stock was $380 not too terribly long ago at the beginning of the month. We've been able to sell enough options against the position that we've collected a little bit under $20, right? So it's off 40. We've collected 20. It doesn't feel nearly as bad. And as we see any more pullbacks, I will continue to sell at the money or out of the money calls against these positions because this is the time where you get a little bit more juice. You get that implied volatility that was a 25 that's now a 33. Or if it's in Apple's case, it was 20, now it's 25. Believe it or not, that makes a huge difference in the amount of implied volatility that's grown there to sell and give you that much more comfort to the downside. And I'll tell you what, I'm looking at some of those names where I would consider starting adding to those names at some point if they start to crack a little bit, like Josh was just saying. And I think that if that's a possibility. I would not be looking for those other names, though, that have no PE or triple-digit PEs. Those are of no interest for me right now, based upon what we are seeing going on in the broader part of the macro market.